Morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, October 20th, and looks like we're almost done with this month, and coming up to Halloween here pretty quick here. So, do got quite a bit of news today. Economic news release is scheduled for today. Tomorrow is going to be an off day, so there won't be any economic schedules, but probably more reliant on fundamentals and headline news tomorrow. So. I will be back tomorrow. But let's go ahead and take a look, see what we got here. We'll start off with the jobless claims. This comes on a weekly basis. Last week we had a 409,000 new claims. They thought it would come in a little bit less, which it did. Not quite to expectations, but still less than the previous week. Existing home sales, next item here. We had for August about a little over 5 million homes that were in existing home sales. We thought it would drop a little bit, and it did. It came in pretty close to where expectations were. It did dip underneath the 5 million mark here. And then we also have leading indicators. It was up 0.3%, and back in September, or actually, back in August, excuse me. And we figured it would drop a little bit, and it was for this month. It was September actually. It was 0.2%. So leading indicators, still showing a little bit of growth there, but not, nothing with a lot of gumption there, so to speak. So, and then we got the Philly Fed, negative numbers, and we figured it was still going to be negative, but we got some strong showing there, so not bad. I mean, granted, we need much higher than 8.7, but it's a big change from negative 17.5 back in September to October to 8.7. So that's actually really good news for us there. Then the Fed Beige Book, as we talked about yesterday, came in yesterday, and basically they did not paint a rosy picture of the economy. So the stock yesterday basically went from positive to negative yesterday, and right now it's kind of continuing, as you'll kind of see here in the headline news. Stock market's down, and European news basically is Germany and France still haven't come to any resolutions yet. There's still concern that Greece could still kind of go into a default here because they have their $8 billion payment they need to make for November, and that's coming up here within next week. So, they don't know, people, they're kind of holding back on the money to give them to pay those investors. And again, because there's still there's no plan yet to be established yet. So. And then also reports coming out that out of Libya, like Gaddafi was killed, and I guess a big push by the the rebels or anti-Libya or anti-Gaddafi forces coming into Sirte. So, nothing's been confirmed yet, but there may be a possibility that may happen. So let's kind of jump over here into the bond market, see what's going on here with the interest rates. As yesterday we said we were way up here. As we saw yesterday morning, we were way up here, and then we had a bit of a pull down yesterday. We're kind of having a nice little rally again today. We did start off lower than where we left off yesterday, and working away. So what that means is that we don't really have a trend going downward, or going upward. So it could really go either way. We are kind of coming towards the 10-day moving average here. So once we can get above that, it will help us out a little bit and lead more of a rally, I believe. And that means interest rates will improve. So interest rates are about the same or a little bit better today, depending on when the lender came out with their price sheets. But yeah, I mean, interest rates are, again, a little bit better today, as we've seen. So stay tuned. Check out my little promotion for you folks, my offering. And meanwhile, I'll catch you guys tomorrow.